Hi, I'm Satyam. This past week, the Indian stock market resumed its upward trajectory, logging its best weekly performance since the end of June. The rally was primarily driven by positive global cues, ahead of the anticipated interest rate cut by the U.S. Federal Reserve. As we enter the third week of September, investors are now keeping a close eye on key market triggers such as new stock listings, domestic and global macroeconomic data, foreign fund inflows, crude oil prices, and, of course, the critical U.S. Fed rate decision. Last week, after a brief pause, domestic equity benchmarks Nifty 50 and Sensex surged to new all-time highs. The Nifty 50 reached a record peak of 25,433.35 before closing the week at 25,356.50, marking a 2% increase from the previous week. Similarly, the Sensex touched an all-time high of 83,116.19 before ending at 82,890.94, reflecting a solid 2.1% gain. These record-breaking levels highlight the market's resilience and the growing optimism among investors. A significant driver of this week's gains was the performance of consumer stocks, which rose by 3%. This growth was fueled by hopes of a demand revival and volume growth, supported by a stable monsoon season. In addition to consumer stocks, the IT sector played a crucial role in the market rally. IT companies, which derive a substantial portion of their revenue from the U.S., saw a 2.8% rise in anticipation of a near-certain interest rate cut by the U.S. Federal Reserve next week. This has added to the overall positive sentiment in the market, as a rate cut could potentially bolster liquidity and spur further investment into Indian equities. On the domestic front, India's Consumer Price Index-based inflation for August rose to 3.65%. While some categories, such as vegetables and pulses, witnessed a double-digit price increase, the overall inflation rate remained below the Reserve Bank of India's median target of 4% for the second consecutive month. This marks a positive sign for India's economic stability, as inflation is now at its second lowest point in the last 5 years, providing a favorable backdrop for continued market growth. One of the most anticipated events this week is the U.S. Federal Open Market Committee meeting, which will deliver its decision on interest rates on September 18th. Investors around the world are eagerly awaiting this decision, as it will likely set the tone for global markets in the weeks to come. A rate cut by the Fed could have far-reaching effects, increasing liquidity and potentially lifting global equities, including Indian markets. Another event that is likely to generate significant interest in the Indian market is the listing of Bajaj Housing Finance on Monday. This IPO has already created a buzz, with investors bidding 64 times the available shares, making it one of the hottest listings of 2024. This listing is expected to further energize the market as investors look to capitalize on the success of this offering. Meanwhile, Japan's inflation data is due on Friday, followed by the Bank of Japan's monetary policy announcement. Any indication of monetary tightening in Japan could introduce fresh volatility to global markets, especially as interest rates in Japan and the U.S. are moving in opposite directions. This could lead to ripple effects across the global financial landscape. Finally, in the commodity markets, Brent crude oil has risen above $72 a barrel, marking its third consecutive session of gains. Much of this rally has been driven by the covering of bearish positions after crude prices dipped below $70 earlier in the week. The recovery in crude oil prices is expected to have implications for global markets, particularly for economies reliant on oil imports and exports. In conclusion, while Indian markets have made significant gains this past week, there are several key events on the horizon that could influence market direction in the near future. The Fed's upcoming rate decision, new stock listings, and global economic data will play pivotal roles in shaping investor sentiment. As always, staying informed and keeping a close watch on these developments will be crucial for navigating the markets in the weeks ahead. This video is made for educational purposes only. Please don't make any investment decisions based on it. If you like the video, please like, share, and subscribe. Thank you.